When I was a resident in New York and the Trump tax cuts passed and he eliminated the state and local tax deduction, I ended up paying more.
All right, let's start today with a little bit of a deeper dive into taxes, some of the elements of the Trump tax plan that some folks still don't understand, but have very much changed the way that some of us pay taxes. I'm going to play a clip for you from last night's Sean Hannity program. Sean Hannity, the Fox News propagandist, friend of Donald Trump, to the extent that Trump has friends, was interviewing Larry Kudlow. Larry Kudlow is a former Trump economic advisor. The topic of the SALT deduction limit was brought up. If you don't yet know what that is, don't worry. I'm going to explain everything to you here, and I hope this will be instructive. Hannity brings up that his taxes as a New York resident went up with the Trump tax plan, acknowledging that one of the major changes made by the Trump tax plan was nothing more than vengeance against blue states, specifically making it so that the residents of blue states like New York and California would pay more while either not affecting or providing new goodies for business owners in red states without income tax. So if this is all confusing right now, bear with me. Let's listen to what Hannity said, and then we will explain it all.
When I was a resident in New York and the Trump tax cuts passed and he eliminated the state and local tax deduction, I ended up paying more. But I didn't deserve that because you're rewarding states that elect, high tax and spend liberals. All right.
Okay. So Hannity acknowledges, when I lived in New York, I paid more thanks to the Trump tax cuts because of the limit placed on SALT deductions. SALT stands for state and local taxes. That includes state income tax, city income tax, if there is one like in New York City, and property taxes and some other local taxes. Hannity says, I was wrongly targeted, essentially. I was one of the good guys because I happened to live in New York. Trump's tax cuts and increases, depending on where you lived, they targeted blue states, and I was caught up even though I wasn't deserving of it. So Hannity admits that that was the point of limiting SALT deductions. Now, here's what this means. Before Trump's tax plan, taxpayers could deduct an unlimited amount of state and local property taxes and either state and local income taxes or sales taxes. So, for example, if you paid a bunch of income tax to the state of New York, you could deduct it from your federal taxes. If you paid 30 grand in state income taxes to New York, on your federal return, you deduct that 30,000 and you don't pay tax on it. It's a nice tax deduction. You could also include in that your property tax, and altogether, it could be $15, $20, $30, $40, $50,000 or much more, depending on how much money you make. What the Trump tax plan did is say, even if you have $20,000 in state and local taxes that you paid, even if you have $30,000, even if you have $40,000, you can only deduct the first $10,000 of that. Beyond that, it's not deductible. So if you were previously deducting $15,000, $20,000, $30,000 in state and local taxes because you live in New York or California, which has a robust state tax to pay for stuff at the end of the day, you lose that benefit. Now, one of the things that was done sort of in exchange for this, it wasn't really an exchange, but it was like we're taking something away, but we're adding something, is that they instated something called the Qualified Business Income Deduction. It's called QBID, and it only applies to self-employed people who have certain types of businesses, not C corporations, which are often the biggest businesses, but S corporations and other pass-through type entities. And it was a new deduction for them. I qualified for that, for example, the QBID deduction. Okay, so what's happening here is that there was a very specific change made so that if you are a small business owner in a no income tax state like Florida or Texas, you aren't affected by the SALT limit because you're already not paying state income tax. You're paying property tax if you own property, but not state income tax. So you're not really hurt very much by the SALT limit. But here's a handout where you can deduct 20% of your qualified business income right off the top and not pay tax on it. It was presented as we're taking one thing but giving another. But if you were in a state like Florida, it was just a handout to business owners. So now we'll get to the Hannity example. Hannity reportedly makes 25 million bucks a year. I don't know if that's true, but he makes a lot of money. Now, I believe he's now moved his residency to Florida, but he used to have residency in New York. So before the Trump tax cuts put in place this SALT limit on Hannity's $25 million income, we would expect that his total state and local taxes would be about 10%, 2.5 million, because there's the New York State income tax and New York City income tax. And then you figure out, okay, so he pays federal taxes, but he can take off the deduction for what he pays to the city of New York and to the state of New York, plus some property or whatever. So before the tax reform, you have a different amount of tax that would be due versus after the tax reform. Long story short, that change probably cost Hannity somewhere between $300,000 and $500,000 a year. On just zooming out, the change probably made it so that his taxes went up by $300,000, $400,000, or $500,000 a year because of what Trump did, because he lived in New York, by saying you can no longer deduct all the stuff you used to be able to deduct. Now, when Hannity moves to Florida, which he did do eventually, where there's no state income tax, you didn't have state income tax before to deduct in Florida. So the impact of that SALT limit is much smaller. Now, if you want to say, okay, that's how it affects Hannity, but the average person probably wasn't affected, not really. You can pretty quickly hit that $10,000 limit. It's not just something that affected the ultra rich. For example, if you own a home with a $5,000 a year property tax and you make $75K a year living in New York City, you'd pay $2,200 in city tax, about $5,000 in New York state tax. So you've got your $5,000 on your property, $5,000 in state tax, $2,200 in city tax. That's $12,000. You're not making a crazy amount of money, but thanks to Trump limiting SALT deductions, you now are no longer able to deduct all of that. And if you make $150,000 a year instead of $75,000, it affects you even more. So the idea that this was something that was targeted towards the rich or whatever, it is really not the case. And even though the notion is Trump cut taxes, there are lots of folks in New York, in California, in Massachusetts, who, thanks to the limit on those state and local tax deductions, ended up paying way more in taxes. And if they aren't business owners, they don't get to participate in the QBID deduction. So I hope that this is sort of clear and that at least the gist of it comes through. Hannity admitting he had to pay more because of that vengeful and punitive thing that Donald Trump did, specifically targeting the blue states. It is time to start thinking like voters and to make sure that kids understand the importance of voting, how it works, registering, ballot initiatives, because so many kids just have no idea. That's why I wrote the new children's book, Think Like a Voter. I can think of no better time and no more important group of folks to try to reach. The book is now available at davidpakman.com/book, where, by the way, you can get the first two books in the series as well. Think Like a Detective and Think Like a Scientist. Really important stuff. Donate them to local libraries, classrooms, read them with the kids. davidpakman.com/book.